I think it's symptomatic of a broader problem, in both the dependency on computers for so much of what's important economically, and then the threat of cyber attacks. So that what I understand is that the government is saying that it's just a coincidence that United Airlines and the Wall Street Journal and the New York Stock Exchange all are down within an hour of each other.
But you're a little suspect.
I don't know. I mean, I don't know enough to be suspect. It's just a coincidence, I guess.
It's an incredible coincidence. The other big news of the day, Greece on the brink of an exit from the Eurozone. How closely are you watching the situation in Greece? What impact does it have, if any, on your strategy?
Watching that one very closely. It doesn't have any impact right now on the strategy too much. China's maybe, rolling the markets a little bit more. But there's a clear debate about what the best thing to do is, and there was a debate this morning in the one of the sessions. People had all different views on it. My personal take on that is that from Germany's standpoint, Greece isn't really an issue. But from Germany's standpoint, if Greece is able to extract concessions from a radical government, then that means that there'll be an incentive in Spain and Italy and other countries to elect a radical government. And I think that's what Germany wants to avoid. So I would then tilt the odds in favor of a managed Greek exit with humanitarian aid and things like that. But I think they've got to blunt that.
Yeah, it's going to be an incredible week over there for sure. We also had the Fed minutes coming out today. We saw Fed members say they're keeping a wary eye on what's happening abroad, both in China and with Greece. Do you think that everything is going to be enough to delay a September rate hike?
It depends on how it plays out. I think the IMF came out again and talked to the Fed about perhaps delaying a rate hike. And there's a lot of sensitivity to, I think, the consequences of rates going up too quickly. But I think from the Fed standpoint, they always take foreign the overseas situation into account, but they're going to do what they think is best for the U.S. economy, all things considered.
All right, well, so let's assume that Greece now leaves, as many big banks are assuming is the base case scenario. Is that enough to delay a rate hike?
No.
No. How about what's going on in China, the huge rout in the equity market over there? I know you own Alibaba, JD.com.
Small positions. Small
positions, okay, for you. What kind of impact does it have on you?
Well, today the stocks were down, or overnight the stocks were down pretty good. And I think that's because you have 70% of the Chinese mainland stocks that are halted, and 70% aren't trading. And I do think that people are concerned about the backwash effect of all the money that's being lost. Now, the Chinese market's still up over 80% in the past 12 months. But the problem there is that most people weren't invested when it was just going up. They were invested when it was up 50, 80, or 100%. So the losses among, let's say, middle-class Chinese are likely to be pretty substantial. And that then will have an effect on the Chinese economy. It'll slow the Chinese economy. It has an effect on commodity prices. So, over already substantial period of time, the link between the Chinese economy and the U.S. stock market doesn't really exist. But in the short run like this, it can have an effect.